For now, let's get back to our discussion on the economy reopening and how are the prospects looking forward. Thermax is one company on our radar. It was a weak quarter that they posted in Q4, expectedly because of the lockdown hitting demand, etc. Revenues in all three segments, energy, environment and chemicals, declined. But what does the way forward look like? MS Unnikrishnan, the MD of Thermax, joins us now to talk about that. Mr. Unnikrishnan, good morning and thank you for being with us on the channel. We're speaking to you after a while. Things have been very difficult and the order book has also gone down for Thermax. But tell us about the way forward. Are you seeing any green shoots anywhere, and what kind of orders do you expect in terms of growth, segment-wise? What are you looking at over the next, say, 3 to 6 months?
Well, even during the lockdown period of April and May, it is not totally a washed out nil order booking. There were orders. There were certain segments which were placing orders, especially the drug and pharma, the food processing industries. We've had orders coming from across outside India, both with the country also. Certainly it is going to be a little weak for the next maybe 2 more quarters. I'm expecting to be weak because there is capacity available unutilized, and like the way you would have heard from multiple people that everybody is expecting that catch up will be up in the second quarter, and possibly third quarter middle onwards we can come back closer to pre-COVID days. So till that time there is no hurry for anybody to be placing orders excepting some traditional tenders. For example, there are oil sector tenders which are already in the market and its construction is already started for that one. So we would expect certain orders to happen from the refineries which are under expansion within the country and outside the country also. Similarly, the cement companies were virtually shut out.
Okay. Well, we've lost that link. It should be getting restored soon. We'll just redial. We couldn't hear Mr. Unnikrishnan's finishing his argument. Yes, Mr. Unnikrishnan, we missed the last few words. If you can repeat. No, I think we will have to put him on phone. Just give us a couple of minutes and we should have Mr. Unnikrishnan with us, an important person who stands at the intersection of many industries and who would know exactly also how Atmanirbhar should play out from an industrial standpoint, from a manufacturing standpoint. Meanwhile, if you can, while you're reconnecting us with Mr. Unnikrishnan, pull up the intraday of the Nifty. This is the most violently choppy chart I have seen. Look at the way, you definitely getting stopped out at 10,160, but the bottom at 10,080 also seems to be effectively protected, and the market is almost rushing back again above the 10,100 mark. Extremely choppy market, and more so on the Nifty Bank. The advance declines throughout the morning has been extremely favorably in favor of advances, at least 4-5 stocks in the green for 1 in the red. So that way the bulls have an upper hand, except that I don't know how many people can make money if the markets whipsaw in this fashion. But more on that in a bit. I think we have Mr. Unnikrishnan with us. Mr. Unnikrishnan, let me start afresh. You told us that drugs and pharmaceuticals and some consumer goods have been placing orders even in the lockdown months, but Sonia was asking you about the next couple of quarters or for the rest of FY21. Will order books grow? You see that at all possible?
Certainly, but you won't be able to match up with the last year's number in terms of order intake. We would have done maybe almost closer to year before last. Similar kind of number to be repeated may not be practical even if you were to be doing everywhere in the world also. So that is the reality. However, we opened the year with the order book almost similar to previous year. My order carry forward for the new year is only 2% lower than the previous year. Even after if I were to take some slow moving orders out, I have 5,300 crore worth of orders on the book right now available, and almost 85% of the customers have reconfirmed that they want to restart the projects. I'm very happy to report to you back that all my factories are running currently, 14 of them across the globe, and we have also every site barring 2 or 3 which there is some local difficulties. They've been able to restart the sites. Work is almost got to a level of 40-45% at each of the sites. We don't have a major problem related to migrant labor because most of our labor were retained and we've taken care of them. So I'm expecting that come end of Q2, my activities in the factories as well as the sites will be catching back to almost normalcy. So with the order carry forward and the customer requirement, I'm sure we should be able to catch up on the revenues also. Yeah, it is going to be a washout for the Q1 for most of the industry, including Thermax also. But Q2 onwards it will come back to normalcy.
Okay.
But order intake for the full year, it can't be matching it with the last year number. I have to be honest about that. Because unless otherwise the existing capacities get utilized fully, at least maybe reach up to a 70-75% utilization, nobody will be in a hurry to place orders, barring the fresh projects as I was mentioning to Sonia about the oil industry and part of the cement industry also I should be seeing at some point of time an improvement.
Okay.
Not in the first half of the current year, second half of the current year.
Yeah, well, time permitting, we'll come back to that. I wanted your view as well on how are you looking at this Atmanirbhar. It has a strong tone of import substitution. There may be some kind of tariff, but more non-tariff discouragement of imports. As an India Inc. personality, how do you approach this? Positive for you?
I would say that, Lata, it is absolutely a positive move by the government. I would totally support it because we have not been able to make a major traction in the Make in India time. But at this point of time, and I'm sure with the skirmishes happening at the border, and in any case, developed world is wanting to have a China plus one option available to them for supply chain. In the past maybe 2 weeks period of time, it is going to be positively impacting a lot of the industry, and capital goods is one major recipient going to be, a beneficiary going to be. I'll be very specific to tell you that one area where India had been suffering on account of imports from a specific country, that is China, in the past maybe almost 2 decades when the economy started opening up in 2002 onwards, we lost out to China. Even for the domestic programs. So whether it is the steel industry or cement industry, power industry, not that India didn't have capability, capacity available. Well, because of the cheap price available of a substandard kind of a plan coming from the country, many Indians had been preferring to import from there, and that is going to be totally changing. I mean, I don't want to name the customer in the recent past. I'm talking about during the shutdown period, where we were in competition with a Chinese company for an Indian supply for a waste sheet oriented power plant for cement company. They can't even enter India for coming and discussing with them. So today, what is the choice available to the Indian customer? He will have to buy from an Indian company. So I am possibly clear about the fact that on 2 counts. One is the government is going to be having non-tariff oriented barriers created, which will help India. Second, the global attitude towards how to have one more alternative created. India will be one of the major beneficiaries along with Vietnam, Thailand and maybe Indonesia, but we will be the major beneficiary. The kind of workforce available, educated people available, we only need to tweak some of our laws and make it easy for people to come and invest in India. I would personally believe that give or take a year to 2 years for COVID impact to be forgone, and then India is going to be literally vertically lifting up. The way we have seen the growth between 2003 to 2010 is what you are going to be seeing between say maybe 23 to maybe 30. I'm very confident about it.
Okay, all right. Sure. Got that. Mr. Unnikrishnan, it was a pleasure speaking with you, and hope when we speak next, things will be even better than what we've seen this time around. It's been a really challenging last few quarters, but thanks for joining us. By the way, just take a look at the market.